Welcome to the Kenya Home Buying Symposium. We have organized this symposium to help you navigate your home buying process with ease, with confidence, and with the right information. So my name is Rehab Kamau, and I'll be your host today. I'm a mortgage coordinator here at UNFCU. So what is our agenda today looking like? So we're going to have our two presentations and an FAQ panel with the discussions. First, we're going to have the home buying process presentation that will be brought out by Caroline Lucas. Then you're going to have a presentation on membership benefits by Jessica Thirwa. Then we'll have an interesting FAQ panel with our home buying experts. So I'm not alone. I'm joined with a distinguished group of panelists who will share their knowledge, their expertise in their various fields of specialty. So we have our moderator who will moderate the panel, and from UNFCU, George Ogwan, who is a mortgage coordinator at UNFCU. Then we have Caroline Lucas, who is a senior mortgage coordinator here at UNFCU. Then we have Jessie Kathirwa, who is our member service representative. Then our panelists and our experts. We have Deborah Njoroge, who is a real estate agent at Knight Frank. Then we have Monica Mwangi, who is an attorney at Mamicha and Company Advocates. Then we have Michael Otieno, who is a valuer at Kenya Valuers Limited. And last but not least, we have Marianne Wahinya, an insurance expert with Jubilee Life Insurance. So before we begin our first presentation, allow us to do some housekeeping items. So to all the participants, please make sure that you're on mute during the session so that we can have a smooth experience. So you are welcome to use the Q&A feature on your screen to submit your questions anytime during these presentations. Now, we are going to get to your questions at the end of each presentation. If we don't get to your questions, our mortgage representatives will follow with you afterwards. So this session is being recorded and it will be available on demand on our website in the coming days. The chat function will not be enabled during this session. So without further delay, I want us to jump into our first presentation on the home buying process, and allow me to welcome our first speaker, Caroline Lucas, to take us through that. Caroline Lucas, over to you.
Thank you, Rahab, and good morning, everyone. Thank you so much for joining us today. My name is Caroline Lucas, and I serve as the Senior Mortgage Coordinator here in Nairobi, the UNFCU Representative Office. Before we begin, I want to start us off with two simple reflections. First, what does owning a home mean to you? And second, imagine waking up in the place you've always dreamed of. For most of us, owning a home is not just about stones and walls. It's stability, it's pride, it's peace of mind. It's the place where you can excel and feel grounded. A place your family can return to, no matter where duty stations take you. At UNFCU, we understand that deeply. We work with members who live all over the world, many of whom want to reconnect with home or invest in their future. And we are here to make that dream possible, right here in Kenya. So today, I'll take you step by step through our Kenya mortgage program. Who qualifies, what's required, how the process works, and how you can start your home buying journey confidently. Let's begin by taking the very first step together. Next slide, please. Congratulations on taking the first step. Buying a home is one of the biggest financial and personal decisions any of us will ever make. And simply by being here, you've already taken that first step. You're moving from dream to making it a reality. At UNFCU, our goal is to make this process clear, manageable, and realistic for you and staff and retirees. We want you to be informed, empowered, and supported from the moment you start looking all the way to closing. We've designed this program around your unique circumstances. We understand how the UN contracts work. We understand how relocations, renewals, and different income structures can affect financial planning. And because our members are global, we are uniquely positioned to offer solutions that work, whether you're based in Kenya, Somalia, South Sudan, New York, Geneva, or anywhere else. In fact, many of the mortgage journeys we support involve members who are stationed outside Kenya, but want to invest back home for retirement, for their children, or simply for peace of mind. That's why our Nairobi office is here, to give you practical local support wherever you are. Now that we've set the stage, let's talk about the mortgage itself. Next slide, please. So what exactly is the Kenya mortgage? It's a USD denominated loan designed to help you purchase a primary residence, acquire a second home for your family, or establish a retirement home for the future. The property must be located in Nairobi, Kiambu, Kajiado, or Machakos counties. We've chosen these counties specifically because of their strong infrastructure, active development, and reliable land registration systems. We developed this program in response to a clear need. Many of our members wanted a safe, predictable, and transparent way to buy property in Kenya while working abroad or earning in foreign currencies. The Kenya real estate market can be overwhelming. Different lawyers, different agents, varying processes, and many people told us they just needed a structure, guidance, and security. And that's exactly what the Kenya mortgage provides. Let's break down the features so you can see how the product actually works. Next slide, please. Let's look at some numbers, and I'll explain them in simple terms. You can borrow up to 700,000 USD on a fixed rate mortgage and up to $1 million on a variable rate mortgage. So what's the difference? A fixed rate means the interest rate never changes. What you pay on day one is what you'll pay on day 3,000. It's predictable and stable. A variable rate means the interest can adjust over time. But, and this is important, we have strict interest rate caps. That means your rate cannot shoot up endlessly. There is a maximum ceiling. So even if the market rates rise, you're protected from dramatic increases. Imagine going from 5% to 15% overnight. That would be a nightmare. Our caps ensure that will never happen under this program. Our mortgage products are designed to give you flexibility, predictability, and protection all in one. Now that you understand how the product works, let's talk about who qualifies. Next slide. Now, let's talk about eligibility. First, you need to be a UNFCU member. My colleague Jessie will guide us through that process shortly. Next, your income must be in an eligible currency. We'll speak more about why that matters in the next slide. You should be a UN staff member on professional or field service contracts, a national professional officer, a general service staff member, or a UN retiree receiving a pension in an eligible currency. If you're approaching retirement, we will use UNJSPF's pension estimate. This ensures that whatever loan you take today remains affordable for you even after you transition into requirement. Another key requirement, the home must be owner occupied. So you, your spouse, or your children must intend to live in the property. Investment properties or purely rental properties are not eligible. Also, permanent residents of the United States unfortunately cannot qualify for the Kenya mortgage. There are a few more technical requirements, but we will walk you through each one step by step. You're not doing this alone. This part usually raises important questions. So let's go deeper into why income currency is important. Next slide, please. Let me explain to you why your currency of income matters. Our mortgage, like I said before, are in United States dollars. If your income is in a stable currency, it protects you from currency shocks. Here's a simple example. If your mortgage payment is $100, and today that's 10,000 shillings in your income currency, but your currency weakens, suddenly you need 20,000 shillings to make the same $100 payment. Such a change can massively disrupt your cost of living. But if you earn in USD, $100 remains $100 always, regardless of where you are. This stability is, of course, essential for long-term financial comfort. We maintain a full list of eligible income currencies by country of employment at unfcu.org/Kenya currency. Now that we've talked about eligibility, let's talk about how we determine your loan amount. Next slide, please. Beside income and employment type, we also look at your ability to repay comfortably. Let's see the next slide. We look at your debt to income ratio, your monthly obligations, your employment history, your credit record, down payment and savings, and the stability of your income currency. Next slide. Next slide, please. We are not just checking numbers, we are checking sustainability. We want you to buy a home and still live your life, still travel, still support your family, friends, neighbors, etc., and still save for emergency and for your future. This is about long-term success, not short-term pressure. Now let's quickly look at what you need to apply for the Kenya mortgage. Next slide, please. Let's go through the required documents. Most of these documents are simple, easy to obtain. Your employment contract or personnel action form, recent payslips, a copy of your ID or passport, 6 months bank statements. These are things available to you on demand. So though the list looks long and daunting, it really is not. The seller will provide you with an offer for sale and the title document. You'll also need to show proof of down payment. The Kenya mortgage will require you to make a down payment of between 20 and 30%. We will determine how much your down payment will be upon review of your application, your income, and other obligations you may have. The down payment must be from your personal savings. It cannot be borrowed from a friend or a loan. This is a regulatory requirement for your financial safety. And remember, the higher the down payment you put in, the lower your loan amount, and therefore the lower interest you will pay over the life of the loan, as well as a lower monthly repayment. We'll also review your Credit Reference Bureau report. If you're in Kenya, Dial *433# on your Safaricom line. It's quick and easy. If you're not able to obtain your credit report in this way, we are available to assist you through other means. Providing everything upfront helps your loan move faster through the approval process. And once everything is ready, connecting with us is very simple. Next slide, please. Once your documents are ready, here is how you can reach us. Call our Nairobi office, email us, or schedule an appointment online. Both phone and in-person appointments are available. We will guide you from the very first conversation all the way to closing and even after that. If you're not sure where to start, we can review your financial profile, estimate how much you may qualify for, and walk you through the Kenya property landscape. And if you're shopping for a home, let's speak before you enter the market. It helps you shop realistically and negotiate with confidence. Every single mortgage differs and is very unique to your personal circumstances. So you may find that your friend and yourself earn the same income. However, your friend qualifies for a higher loan amount than you do. This is why it's important to speak to us, because you never know what obligations your friend has or what's different in their lives. Speaking to us will definitely guide you to obtaining a loan that you will pay off confidently and comfortably. Before you make any payments to a seller, please wait for our pre-approval. Once you submit your documents, we will look at all areas surrounding your income, how much it is, other obligations you may have, other debts, or deductions. We will then give you the amount that you can realistically qualify for. So approach us. Every seller is in a hurry to sell, and they will make you feel like the property will disappear if you wait one more day. This is not the case. Remember, paying the seller a down payment is easy. Getting it back if you do not qualify for the loan or if you change your mind is a different story altogether. So approach the market with an open mind. Do not give the impression that this is your dream home and you're ready and you cannot do without it. It might be your dream home, but remaining neutral will definitely help you negotiate and get great terms that work with you. So once we receive your documentation, we will review it. And then we will tell you, go ahead and pay the down payment. You're good for this loan. And at the same time, we'll require the valuation report. So that's a bit of background and the features of the Kenya mortgage. Again, I said it's a very personal commitment and will differ from person to person. Next slide, please. As I said earlier, home ownership is not just about buying property. It's about peace of mind. It's about belonging. It's about creating a foundation for your family and your future. Next slide, please. We do have a Uganda mortgage, and you can schedule an appointment with them the same way as a Kenya mortgage. You would go to unfcu.org/Uganda mortgages. Next slide. We also have international home loans. Perhaps you want to buy property outside of the 4 counties that we finance, or you want to build your own home, or you want to buy a plot of land on which you will build later. You may also want to purchase a home in another country, say Tanzania, Greece, or anywhere else in the world outside of the United States. If the Kenya Mortgage and Uganda Mortgage Program are not a proper fit, you can consider our international home loans. And we have more information on this on our website. Please visit unfcu.org/international to see the options available to you. Next slide. At UNFCU, we take immense pride in supporting our members through this decision. Many of our members have told us that buying a home was the moment they finally felt settled, anchored, and secure. So I'll ask you again. Imagine waking up in the place you've always dreamed of. That feeling is possible, and we're here to walk that journey with you. Thank you so much for your time today. I will hand it over back to Rahab. Thanks again.
Well, thank you so much, Caroline, for that informative and insightful session. So I can see we have a couple of questions. We'll open up it now for the Q&A segment. So the first question, if I am a UNFCU member by introduction from family member and not a UN staff, but work in an NGO and paid in USD, do you qualify for Kenya Mortgage? So if they are UNFCU members and they're UNFCU member by virtue of being introduced by a family member and they work in an NGO and paid in USD, do they qualify for a Kenya Mortgage?
Thank you, Rahab. So to qualify for a Kenya Mortgage, you must be currently a UN staff, professional or field service, national professional officer, general service staff with a current contract or a UN retiree. We welcome our members who have been connected by family. However, we would not be able to advance you a Kenya Mortgage, even if you earn in USD.
All right, thank you so much, Karen, for that clarification. One more question. I see investment properties are not eligible. Can I buy a house by planning that I will live there in the future, but till that to be ready for rent? I'll come again. I see investment properties are not eligible. Can I buy a house by planning that I will live there in the future, but till that to be ready for rent?
The fact that it's ready for rent would disqualify you from the Kenya Mortgage. You might be buying a future retirement home, but in the interim, your partner, your spouse, your family, your children should occupy the home. It is not intended for investment. We are strictly financing owner-occupied homes.
Well, thank you so much, Caroline, for that clarification. I have another question.
Yeah.
If someone wants a refinancing, are they still expected to pay the down payment of 20% to 30%, given that they had already paid when they took the mortgage with the earlier provider? Let me come again. If someone wants a refinancing, are they still expected to pay the down payment of 20 to 30%, given that they had already paid when they took the mortgage with the earlier provider?
That's actually an excellent question. No, you're not supposed to pay 20 or 30%. How it works is whatever amount of loan that you would like to refinance in UNFCU should not exceed, say, 80% of the value of the property. So say you took your loan 2 years ago, $100,000, and you now want to move to UNFCU. If the value of the property, I'll use the same example, was $100,000, when you're coming to refinance with UNFCU, the maximum amount that we'll be able to give you under refinancing is 80% of that, which is $80,000. So whatever you've paid off at the other bank is your equity, is what we count as quote unquote down payment. So there's nothing else that you need to pay as long as the amount is not exceeding 70 to 80% of the value of the home now.
Thank you so much, Caroline, for that excellent clarification. Then a question also on the properties. So what property types are eligible for a Kenya mortgage?
Another good question. You can purchase a standalone home, a townhouse. Perhaps you want an apartment. We have properties in gated communities. And thankfully, our valuer, Michael Otieno from Kenya Valuers, is here to tell us about all the other kinds of properties that you can access in Kenya. I should mention that, like we said, investment properties are not eligible. So we obviously would not be able to finance you to purchase, say, a block of flats or an office. It must remain strictly residential, regardless of whether it's an apartment, townhouse, or any other type of residential property.
Well, thank you so much for that detailed clarification. Another question. I am a UN retiree who took my lump sum, but have another active pension. Am I still eligible for a UN mortgage? I'll take that again. I am a UN retiree who took my lump sum, but have another active pension. Am I still eligible for a UN mortgage?
I would need a bit more clarity on whether the pension is from UNGSPF. So let's say this, if you're a UN retiree, we are considering the income, the pension that you're getting from UNGSPF in an eligible currency, USD, Swiss franc, euro, whatever the case. Or if you have a current contract in an eligible currency, perhaps not in the UN, you can approach us and then we'll be able to advise if you're able to obtain a loan. But regardless of you being a retiree, you're still welcome to apply, because it doesn't matter when you buy the property. Perhaps all along, you've not found what you really, really wanted, and you chance upon it in retirement. We will not shy away from financing you. We will calculate, we will use your current income, and we'll see how we can support you to own this dream home that you've identified.
Thank you so much, Caroline. We also have another interesting question. Members who are interested in buying a property in Laikipia, that is Nanyuki. Any chance that the program will be expanded in the near future?
Thank you for the question. You know, in this world, never say never. However, for now, we finance in Nairobi, Kiambu, Kajiado, and Machakos. Perhaps Nakuru, Naivasha will eventually join the program, but at this stage, we finance the 4 counties.
Well, I see, keep your questions coming using the Q&A feature on your screen. So thank you so much for the engagement. Karen, before I let you go, maybe one more question. What happens if I buy a home using the Kenya mortgage and I reside in it as stated in the eligibility clause, but in the future, I get deployed in another duty station before the loan's final payment?
And the question is?
What happens, let me get that again. What happens if I buy a home using the Kenya mortgage and I reside in it as stated in the eligibility clause. But in the future, I get deployed in another duty station before the loan final payment. So what happens in between?
I get you.
Okay.
Thank you. So you've bought the home, you're residing in it, and then
Yes.
you go to another duty station. Like I said before, we understand how your contracts, renewals, duty stations may impact your financial obligations. So if you're relocating, if you have family here, you can let them continue living in the property. You could decide to sell the property and pay off your loan. In whichever case, please approach us when you intend to separate so that we can look at your unique circumstance and tell you how to proceed. However, even in your new duty station, I'm sure you'd be able to pay the monthly repayment comfortably. This is a delicate situation, and it's best to approach us so that we have a one-on-one discussion on your options. Thank you, Rahab.
Thank you, Caroline. Before I let you go, one more question here on how will my down payment impact my monthly mortgage payments? How will my down payment impact my monthly mortgage payments?
Okay, good question. So the down payment, or locally in Kenya, we call it a deposit, will impact your mortgage payment as follows. Say you're borrowing $100,000. No, say the value of the property is $100,000 and you have 20% down payment, the minimum requirement. So your loan will be $80,000, right? Say again, this property you're buying, yes, is 100,000. However, you want to pay 40% down payment, and the loan we are giving you will then be $60,000. Between 80,000 and 60,000, we can note a few things. The interest that will be levied on the higher mortgage, the $80,000, will be more than what is charged for a $60,000 mortgage. And you'll be able to pay it faster since it's a lower amount. And then $80,000 will definitely have a higher monthly repayment than the $60,000 that you borrow. Also, here at UNFCU, if you put in more than the minimum down payment requirement and you pay, say, 35% or more, then you're eligible for a lower rate on your mortgage as opposed to when you make the minimum payment. I should also mention that our loans do not have any prepayment penalties, so you can pay off your mortgage anytime without incurring additional interest. We do not calculate how much interest you'd have paid us over the 15 years and then dump that on you. No, if you have the money to clear, you will pay the principal outstanding and whatever interest has accrued since the last payment. And that's one of the most beneficial features of this mortgage, because you'll find some, like in our local banks, they'll ask you to pay 4% for prepaying early, 4% of the interest you'd have paid. So higher loan, higher repayment, higher interest. Lower loan, lower repayment, lower interest, lower risk. I hope that clarifies.
That clarifies. Thank you so much, Carol, for that detailed clarification. We are having a very engaging session. Before we still have one question. What are the fees associated with applying for a Kenya mortgage?
Okay, also a good question. I can see you're thinking deeply through this process. So yes, there are various fees that apply. One of the fees is UNFCU's processing fee, which is 1% of the loan amount. If you're borrowing 100,000, 1% of that amount you'll need to pay as processing fee. Then we said the property will be valued. The valuer's fee will apply, and it's based on the value of the property. There are also legal fees. In the mortgage process here in Kenya, you'll find several different lawyers in the transaction. UNFCU has its lawyers, and Monica Wango is here today with us. The seller may have their own lawyer. You may want to have your own lawyer. So there'll be legal fees associated during that process. And I don't want to say unfortunately, but in most cases, if you're purchasing in a development, maybe a large gated community, you will need to pay the seller's legal fees as well. It just comes with the contract. And then we also have insurance. Marianne will take us through that. And why are we asking for insurance? Life insurance, say, God forbid, you pass on. The life insurance cover that you've taken will be used to pay off your outstanding Kenya mortgage. So you're not leaving your family with concerns, with the possibility of not being able to make repayments and having to sell their house or having it foreclosed. The insurance cover will give them peace of mind. It will also give you peace of mind because you don't want to leave your family with problems. Property insurance, anything can happen to the property. Could be floods, could be fire. The property insurance will help you pay for that. And it ensures that UNFCU's security, which is your home, remains in the value that it's supposed to be. So if, and like last year but one, there were heavy floods in Nairobi, and several of our mortgage customers were impacted, but they did not have to pay for any of the repairs. And I can tell you, repairs are costly. So you might say, why would I need insurance? But you don't know what's going to happen the next day, perhaps a fire, perhaps the floods, like I said. So that's why we need life and property insurance. We have negotiated very good premium rates with our insurer, and they are definitely more affordable than if you're just going into the market to look for your own insurance cover. So those are the costs. Usually, oh yeah, I should mention stamp duty. Stamp duty is a government cost, 4% of the value of your property. 4% of the value of your property as stamp duty. Regardless of whether you're a Kenya national or not, regardless of your diplomatic status, let's say, the 4% must be paid by everyone. It's not exempt, and it's the largest cost that you'll incur beside your down payment. So 4% stamp duty. So those are the costs that you can expect to incur.
Thank you, Karen, for that detailed breakdown of the Kenya mortgage cost. We are having a very interactive segment. So some questions also here. How is the country in which I work relevant to my mortgage request? How is the country in which I work relevant to my mortgage request?
It comes down to the currency that you're earning in that country. So if you go to our website, there's a list of the countries and the currencies that we can accept in those countries. So for example, Kenya will be on the list. There's of course all the stable currencies and the Kenya shilling. In another country, maybe Croatia, it will be the euro. So to know really how it will affect you individually, just visit our website. There's a list of countries and the eligible income from those countries. Then you can see if you qualify.
Thank you, Carol, for that clarification. Then someone asked, do you finance building a home when someone has land already?
We do finance building a home, but not under the Kenya Mortgage Program. For a Kenya mortgage, the property must be complete and ready for occupation when you're placing your loan application. I had mentioned the international home loans. We have the international home build, which is more suited to your needs. We have international home loans. This is, of course, if you want to buy as opposed to build. We even have home renovation loans. So yes, you may qualify for one of the other three loans, but for the Kenya mortgage, it must be complete and ready for occupation.
Thank you for that detailed explanation. In the same breath of international home loans, so can an international home loan be used instead of Kenya mortgage to purchase in another country?
Yes, it can. That's the simple answer. Yes, it can. International is any other country outside of the United States. Even in Kenya, you might decide you don't want to go through a Kenya mortgage and you just want the unsecured loan. The international property loan is there for you as well. It doesn't mean that because it's Kenya, you must do it like this. International property loans are available as long as it's out of the United States.
Thank you. Still some more to go. What is the maximum loan duration for the Kenya mortgage?
The maximum loan duration is 15 years. That's 180 months. And it doesn't matter how long you have left on your contract. See, because we're even financing retirees and they can still pay for 15 years. That's the maximum repayment term.
Thank you, Carol. Another question. If someone takes a leave of absence from the UN job for a year, how will this affect the mortgage payment or in the application of the loan? If someone takes a leave of absence from the UN job for a year, how will this affect the mortgage payment or in the application of the loan?
You will apply for the loan when you're not in the leave of absence while you're still actively working. That's one. Now, if you take a leave of absence when you already have a home, we expect you to continue making your monthly payments as usual. So when you're planning your leave of absence, it's good to think ahead because the monthly payment that was determined for you continues to, we continue to expect payment. However, in addition to that, you need to contact us directly or our collections department to see if we can structure a payment that is comfortable for you, but that is on an individual and if very necessary basis. So a leave of absence, we will not approve your mortgage application. And if you already have your loan, you will continue to make your monthly payments.
Thank you for the detailed clarification. Then on the currency, is the currency you lend only in USD?
Yes, all our loans are denominated in USD. We give you a loan in USD and the repayments are also in USD.
Yeah, thank you so much. Then is it better for someone to purchase a condo versus a home if they are coming another duty station? Let me take it that again. Is it better for someone to purchase a condo, maybe what we'll refer here as an apartment, versus a home if they are coming another duty station?
Honestly, the choice is 100% yours. I would not say I recommend this over the other. What I would say is maybe get in touch with your colleagues who are here, who have already been here, who know how it works in the market. Then they'll be able to give you a better picture of what might be beneficial for you. All the homes, everyone has a different preference for the type of property. So get in touch with your network. It will be your greatest ally, as well as our valuers here, Kenya Valuers. They have properties listed. They can guide you on finding a home that's suitable for you, be it a condo or a standalone home.
Thank you so much. We're having a very interactive and engagement sessions. Keep your questions coming. The another one for you, Caroline, for investment options, what developers do you recommend?
Thank you, Rahab. I'll go back to your network, your colleagues, your friends who know the market. They're able to recommend reliable developers that we have in the market. Even searching on our, is it Google, you'll find various developers listed there to give you an idea of what is on offer, but it's highly, highly recommendable to, one, check with your network here, and two, contact the real estate agents. We have Deborah from Knight Frank, we have Michael from Kenya Valuers, and they'll be able to tell you, this one is not reliable, or yes, 2 thumbs up, go ahead.
Thank you, Caroline. And now to our final question. When looking at the housing market in these 3 counties, there is a sense that many properties seems to be overvalued. How does UNFCU process address this? I can take it again. When looking at the housing market in these 3 counties, there's a sense that many properties seem to be overvalued. How does UNFCU process address this?
Okay, so first of all, it's 4 counties: Nairobi, Kiambu, Kajiado, and Machakos. I'm not sure where the sentiment that the properties are overvalued comes from. However, we could say overpriced, not overvalued. And that's why a valuation report is an important requirement for your loan. The valuers know how to calculate what the fair market value of the property is. So if someone is selling the house to you at, again, 100,000, and Michael tells us, no, the value is 90,000, we will go with 90,000. So you will have to pay an additional down payment because we are financing you a maximum of 70 to 80% of the value of the home. So it would be now up to you to go back to the drawing board with the seller and say, hey, look, this is the value that came from the professional. Or if you really, you're just in love with the home, then you swallow the bullet and you make the additional payment. So you'd need to pay 20 to 30% of, did I say 80,000, 90,000, whatever the value is, and the additional 10,000 as well.
Wow, thank you so much, Caroline, for that informative session, for the clarification to the members' questions. Now, I also want to thank the audience for making this session interactive and engaging. So we're now going to take our first break. Welcome back, everyone. We're now going to jump into our next presentation on member benefits. And I'm glad to be joined in by Jessie Kathirwa, who will be taking us through. So Jessie, over to you.
Good afternoon, everyone. It is now officially midday in Nairobi. Welcome to this segment of the membership benefits presentation of the Kenya Mortgage Home Buying Symposium. My name is Jessie Gadhirwa, and I'm very happy and excited to speak to you into the benefits of joining UNFCU as a member. As a preamble, UNFCU offers you, our members, more than just traditional banking, cash, teller, and over-the-counter services. From lower fees to globally accessible and personalized services, UNFCU membership is designed to make sure that your financial life is easier wherever in the world you are located. So welcome to this section. Let's actively participate and listen, and let's take it away. Next slide, please. Under the membership benefits segment, we will delve into two main areas. These are financial security and global banking solutions. Under financial security, we will look at how UNFCU protects your money and personal information, which is at the core of what UNFCU does. Financial security is one of the top priorities at UNFCU. As a UNFCU member, you benefit from secure mobile and digital banking platforms, strong encryption and monitoring to make sure that your UNFCU accounts are safe. In addition, your UNFCU deposits are federally insured up to $250,000 by the National Credit Union Administration. A strong financial backing ensures that you and your family are protected from financial ruin. You work so hard in the UN to ensure that your finances are covered. So here at UNFCU, we make sure that not only is your money safe, but it works for you in the future. Next slide, please. We will now look at how your UNFCU membership fits your needs. As a UNFCU member, you are a part owner of the credit union. This means that you get to vote for the directors of your choice to sit on the board of directors at UNFCU. In effect, this gives you a voice in how the credit union runs and operates. At UNFCU, we have a maxim that says, once a member, always a member. This means that once you join UNFCU, you're a member for life, whether you change jobs, retire, or relocate. Also, your UNFCU membership is not just for you or just for you as an individual UN staff member or a retiree. Your spouses, parents, children, grandchildren, even grandparents, siblings, and any other eligible beneficiaries can join. Remember what we said from the start. This ensures that you have long-term financial security for your entire family. Next slide, please. At UNFCU, we ensure that your deposits are safe. Your money is insured by the US government through the National Credit Union Administration, or what is called the NCUA, and each of your accounts is covered up to a maximum of $250,000. The coverage extends to all our members, irrespective of where in the world you are located. So you can rest assured that each and every amount in dollars that you save in UNFCU will be covered up to $250,000 per account. To learn more, please visit unfcu.org/NCUA. Next slide, please. At UNFCU, we offer you a variety of resources tailored to your needs, including and not limited to a dedicated help or contact center, easy to understand product guides, for frequently asked and answered questions to answer common everyday questions, as well as financial calculators to plan your savings, loans, and budgets. In addition, we have a financial wellness page that offers you useful articles, videos, and even webinars like these, all designed to educate and empower you to make smart, sound, and financially beneficial decisions. Next slide, please. Remember, we said we're doing two key benefits today: financial security and global banking solutions. In this segment, we will look at how UNFCU enables you to save, spend, borrow, and transfer. Whether you're saving, spending, borrowing, or transferring money, UNFCU ensures that your money works for you across borders. Now let's look at each of these individually. Next slide, please. Under the Save option, UNFCU helps you grow your savings with a variety of options designed to fit your financial goals. To this end, we at UNFCU will open several types of accounts for you, all geared to make sure that your money is saved and growing. One of these is what we call the high yield savings account. This is an easy to open account with no minimum opening balance requirement. In fact, if anything, you are required or your account can have a zero balance up to 60 days from the day that you opened. So please do not feel that you are under any duress or pressure to fund your account. You are within 60 days to fund a new account with UNFCU. With a high yield savings account, you can add or withdraw money at any time. And of course, at very competitive interest rates. This means that the more money you save in the high yield savings account, the higher the returns you derive from it. Secondly, we have a product called a share certificate. This is close to my heart because here at UNFCU Nairobi, I am very passionate, actually extremely passionate about the creation of members' share certificates. Now, what is a share certificate? A share certificate is basically, or in normal parlance, what you would call a fixed deposit account or a term deposit. So for longer term savings, UNFCU offers you several types of share certificates, ranging from 3 months to 60 months. The very first one that you can open with $250 is called a Simple Saver share certificate. All other share certificates can be opened with a minimum of $500. These can be renewed at maturity, and or the maturity options can be altered at the member's discretion. What this means is that, for example, you can, at the end of the term of the maturity term, you can add or withdraw money to your share certificate or change the term. Now, maybe just as to digress a bit, the current share certificate that gives you the best rates is the 4-month share certificate. So for more information, please visit, if you can, our UNFCU office here in Nairobi, and we'll be glad to walk you through this particular product. Remember, it is important to choose an appropriate share certificate term that matches your preferred savings timeline. Next slide, please. Now we will delve into the second category, which is spending. Of course, we all earn to spend. To this end, UNFCU supports you by opening what you can call our everyday checking accounts. These UNFCU checking accounts make managing your money simple, flexible, and convenient because one, they have, just like the high yield savings, they have no minimum opening balance requirement. You also get unlimited transfers, cash withdrawals, and retail and point of sale debit card purchases, all based on your available account balances therein. Next slide, please. Okay, under the spending option again, UNFCU offers our members credit cards. UNFCU has 2 main types of credit cards, the Visa Elite and the Visa Azure credit card, each of which is designed to match members' different spending habits and lifestyles. For the Visa Elite card, this is mainly ideal for travelers. It offers our members no foreign transaction fees, 5 free airport lounge access passes per year, 24/7 concierge services, and it comes with a $50 annual fee. In contrast, or in comparison, the Visa Azure card is perfect for everyday use. It provides our members price protection, and therefore you can be reimbursed if an item goes on sale. It also offers you return protection if a merchant won't accept a return within 90 days, up to a $250 purchase value. It also gives our members cell phone protection. So if your phone is lost or stolen, so long as you have made a purchase of your bill with the Visa as your card. This card, unlike the Visa Elite card, comes with no annual fee, but has a 1% foreign transaction fee if the card is used outside the USA. For more information, please contact unfcu.org/credit-cards. Next slide, please. As an introductory offer to our members, the Visa Elite, any new Visa Elite card that a new member gets is charged 0% annual percentage rate for the first 6 months. For a Visa Azure card, that is 0% annual percentage rate for the first 12 months. And for both cards, you earn 10,000 bonus points when you spend 2,000 in the first 4 months. Next slide, please. Okay, now we look at basically what most of us are interested in, borrowing. UNFCU provides you, our eligible members, with loans to support all your critical life moments, be these education, weddings, vacations, home renovations, whatever it is, UNFCU will be there for you to offer you, our eligible members, a loan. Now, some of the features of this are UNFCU loans have no application fees. We also have no prepayment penalties. Therefore, you can pay off a loan early without incurring any extra costs and therefore saving on interest payments. Another feature is that you earn member loyalty rebates and dividends. These rewards recognize your ongoing relationship with UNFCU, giving you bonus dividends on your savings and loyalty rebates on certain fees like ATM cash withdrawals and wire transfer fees. These rewards are credited monthly automatically to your account at the beginning of the next calendar month. And UNFCU loans therefore help to build a rewarding partnership that ensures that your financial future is guaranteed with UNFCU. To learn more on this particular feature, please visit unfcu.org/loans for more information. Next slide, please. Next slide, please. Okay. Under the transfer, which is the last option as far as the global banking solutions is concerned, UNFCU gives you wire transfer options. Transferring money from UNFCU is easy and fast, and there are no hidden fees. Incoming transfers from other financial institutions are not charged any fee, whereas outgoing transfers have a set transfer fee with competitive exchange rates and full transparency. You can also send money in almost any approved currency globally. Next slide, please. Now, as a UNFCU member and a UN staff member or retiree, UNFCU provides you as the UN employees the option to deposit all or a portion of your monthly paychecks directly to your nominated UNFCU accounts. I know most of you who have UNFCU accounts know that you can visit Umoja to create an amount that comes directly to UNFCU. So this is really at your discretion. Like I mentioned earlier, there is no balance requirement that you should designate, say, $50, $100, $200. This is purely up to you to decide how much you want to be contributing to your UNFCU account. In addition, UNFCU retirees can also designate that their monthly pensions be credited to their UNFCU accounts of choice. At this point, I'll also mention that UN retirees are also eligible for loans. And therefore, both active staff members of the UN and retirees can easily access their funds uninterrupted. Remember what we said earlier, and I'll piggyback on this. Once a member, always a member. And remember, your money is insured up to $250,000 per account. Next slide, please. Okay, digital banking. This is something that is also close to my heart because most of you are members may not have the option to visit a branch. So what does UNFCU provide you with? We provide you, our UNFCU members, with the ability to handle all your account tasks safely and securely online through what we call the UNFCU digital banking platform. So whether you're using a personal computer, a laptop, your phone, the digital banking platform of UNFCU allows you, our members, to set up and manage account beneficiaries, to open new deposit accounts, like I mentioned, for example, the high yield savings, the checking account, the share certificate. It also enables you to apply for loans and or credit cards under the account services tab. You can view your statements as well under still the account services tabs, where you'll see statements and notices. And you can also set up customizable account and card alerts. Remember all these without necessarily physically visiting a UNFCU branch or representative office. Still under digital banking is something that we call Google Authenticator. Google Authenticator allows our members to access their UNFCU accounts through a secure and free application, which you can download from either your Play Store for those on Android phones or on the App Store for those with iPhones. Members are therefore able to verify their codes with a unique time-sensitive code, which is instantly accessible, which requires no text, call, or email requirement. Remember, Google Authenticator works all over the world, therefore making your banking with UNFCU secure, convenient, and designed to fit your busy lifestyle. Next slide, please. Allow us to do just a quick recap of what we have said today. UNFCU is more than a financial institution. It is a member-owned community dedicated to its members' financial well-being, whether from secure savings and smart spending options to flexible borrowing and global transfers with no hidden fees and costs. We have also discussed that UNFCU provides you the tools and benefits that suit your life wherever in the world you're located. The UNFCU member loyalty program rewards you and recognizes and appreciates your ongoing relationship. And the digital banking platform, what we've just discussed, gives you a convenient and secure access to manage your finances anytime and from anywhere. In closing, I want to thank you for your time and attention today. I also appreciate the opportunity that you've accorded me to support you in this financial journey by listening to me. If you want to learn more, we are always at hand, ready and willing to assist you, and happy and willing to assist and attend to you accordingly. Back to you, Rayab, and thank you all for listening.
Thank you very much, Jesse, for that informative and insightful session. We'll now move in to our Q&A segment. So have the first question. Can you expand on the money transfer options? Do we have M-Pesa available through UNFCU? Can you expand on the money transfer options? Do we have M-Pesa available through UNFCU?
Okay, I will start with saying, yes, you do have wire transfer options under UNFCU. So for this, I will go to the digital banking profile and say you will need to log in to your digital banking profile and create a recipient under what you see as the Transfers and Payments tab. So when you click on the Transfers and Payments tab, you will then go to where you will see Send a Global Transfer, and you will be able to indicate that you're sending a transfer to, say, for example, an account outside of the US. This is where specifically M-Pesa comes in. So you will set up your M-Pesa account because you'll see two options, add mobile money or add bank account. So you will do this under the add mobile money account, and you will key in your M-Pesa number for you to be able to transfer from UNFCU to your M-Pesa. The fee for the transfer is $1, irrespective of the amount that you are sending. And remember, you can send the funds, you have the option to designate to transfer in either local currency, Kenya shillings, for example, or USD. You will also see member or recipient to receive or recipient to send. So I would recommend that you choose recipient to receive, so that the exact amount that you elect to receive is the same amount that you will get. Remember, the fee for this is $1 for every transfer to M-Pesa. I hope that answers the question.
Yes, thank you so much, Jesse, for that clarification. A second question, does UNFCU accept wire transfers in a foreign currency?
Okay, so let me take that this way. Your funds will be received into your UNFCU account in US dollars. So if you're sending an incoming transfer from a different currency, your funds will be received in your UNFCU account in the US dollars. Remember, your UNFCU account is dollar denominated. Therefore, you will receive the funds in USD, irrespective of the currency that you have sent from. So I just limit that to incoming wire transfers. But as far as outgoing transfers is concerned, you are allowed to send in a currency that is approved, mainly US dollars. You can do that in Kenya shillings, euros, Swiss francs, GBP, which is pound sterling. So that really depends on the member and the currency that they prefer to send the money. That is strictly for outgoing wire transfers. Back to you, Rahab.
Thank you so much, Jesse, for that clarification. Another question, is there an option to take the credit card in one of the other major currencies like Swiss franc or euro? Is there an option to take the credit card in one of the other major currencies like Swiss francs or euro?
Thank you for the question. Like I mentioned, our accounts are dollar denominated. So too are our credit cards. So to that extent, our credit cards are also dollar denominated. So the short answer to that question is no, you will not be able to get a credit card in either Swiss francs, euros, or UK pounds, for example.
Thank you, Jesse. Then on ATMs, how much money can I withdraw from the ATM?
That's a very interesting question, and also something close to my heart as the ATM custodian here in Nairobi. Let me specifically say this, that the maximum amount that you can withdraw from your debit card, UNFCU Visa debit card, is $500. That is the maximum allowable per transaction. But we have allowed you an option to increase your ATM daily cash withdrawal limit to 1,500 per day. So what does that mean? Again, using the digital banking platform, you log in, and I will say this very slowly so that possibly you may want to write. You log in and click on Account Services tab. You then click on the Card Management tab, and then locate the Modify ATM withdrawal limit. You can then increase your daily withdrawal limit from 500 to either 1,000 or 1,500. For those are the three options that you have. You can also even reduce that to 200 if you wish to. But if you would like to withdraw more than 500, you can increase that to the maximum 1,500. That will allow you to withdraw $500 per withdrawal from the ATM 3 times. Remember, the fee for every withdrawal from the UNFCU ATM is $2 for every withdrawal. So yes, in effect, you will have increased your limit per day to 1,500, but you will be charged $2 for every $500 withdrawn from the ATM. So the short answer is 500 is the allowable amount per day, but you have the option to increase that to 1,500 at the member's discretion. Back to you, Ria.
Thank you. Thank you, Jesse. Another question for you. What is the annual fee on your credit cards?
Okay. Like I mentioned, there are 2 types of credit cards. You have the Visa Azure and the Visa Elite. The current indexed annual percentage rate on the Visa Azure card is 16.74%, while that of the Visa Elite is 15.74%. So those are the 2 rates per annum for those 2 credit cards.
Thank you, Jesse. More question. Are there foreign currency transaction fees when I make purchases in non-USD?
Using which card? Is it specific?
Not a specific card, maybe can
Okay,
generalize,
so
give a general.
I'll generalize and say yes, using the Visa Azure card, yes, there is a 1% foreign currency transaction fee. That is for the Visa Azure, as well as for the Visa debit card. If you're making a purchase with your card outside the US, there is a 1% foreign transaction fee.
Yeah, thank you so much, Jesse. Questions coming in. How much will I receive as a credit line on a credit card? How much will I receive as a credit line on a credit card?
Okay, that is specifically maybe related to limits, credit card limits. So the Visa credit card limits on a Visa Azure start from $3,000, while those of Visa Elite start from $5,000 through to $50,000. Basically, the amount that you apply for in terms of the credit limit is at the member's discretion. So ideally, it is up to you as a member to designate the amount of the credit limit that you wish to have. But remember, because a credit card, for example, is a form of loan, the final decision as to how much you will be eligible for will be taken, or the decision will be made by the UNFCU Consumer Lending Department in New York. So yes, you may apply, for example, for $10,000, but in terms of eligibility and other factors held into account, you may possibly get, say, $5,000 or even the full $10,000. But remember, the limits are per member at the member's discretion, but the final decision is made by the Consumer Lending Department in UNFCU New York as far as the credit limit is concerned.
Thank you, Jesse, for that detailed clarification. Another question on an issue that is closer to your heart also. How many share certificate accounts can I open?
Oh, very interesting. And yes, indeed, very close to my heart. A member can have as many share certificates as they are willing to have. That is the short answer, but I'll also explain and expound a little bit more. To the extent that you have a free-floating $500 in your account, please, if you do not feel the need to use it immediately, we have what you call a 3-month share certificate. You can put your money in the 3-month share certificate and you will see how much that will give you. But to answer the question directly, you can have as many share certificates as you wish to have. The good thing about that is you can stagger them. You can have one for 3 months, another one for 4 months, another one for 6 months, and even another one, say, for example, for 12 months. So the maturities of each of those will be different, and you will be earning what you call compound interest on that. To the extent that you're earning compound interest, that means that as one matures, you can elect not to renew it, add what you have at the end of the maturity to what you have in your savings account, and start a new one. That, in effect, creates a chain or multiplier effect for your savings. And you remember that your money is growing with UNFCU exponentially if you do it like that. So to answer you, the person who has written, as many as you would like. Please feel free to come and we will help you open as many as you would like.
Thank you so much, Jesse, for that detailed explanation. Another question on credit card here. When you create a credit card, do you have to create another account for payment, or will the payments via your credit card be deducted from your checking account?
Very good question as well. The nominated account for credit card repayment is decided by you, the member. So you do not have to create a new account for credit card repayments. Ideally, and in most commonly, the account from which the credit card payments are made is the one that your UN payroll or pension amount comes from. So you don't necessarily have to create a new account for credit card repayments. This is usually the account into which the payroll or pension comes in. Back to you, Ria.
Thank you so much, Jesse. Then still on credit cards, how can I add as an authorized user to my UNFCU credit card? How can I add as an authorized user to my UNFCU credit card?
Okay, so once you create a credit card, you have an option to at least have one and a maximum of 2 additional credit card holders. So for that, you would need to go into their website and request for an additional cardholder request. There's also a form that you have in your digital banking profile that allows you to request for an additional credit card holder on your credit card.
Thank you. Still getting more questions on card. Can I get debit cards for my children's custodial savings accounts?
Okay, that's specific. So let me just narrow it down to this. For a custodial account, you do not, as a custodial account, you do not have a debit card. So debit cards would start if you have a child who's, for example, say 12 to 17 years. And specifically, you would have to open what you call a youth checking or youth savings account. So the short answer is, if your child is 12 or between 12 and 17, you can convert their account from a custodial account to a youth savings or youth checking account, for which they will then be eligible to get a debit card. One thing I should mention under this is that there are limits. That, for example, for a youth savings or checking account, there's a maximum of that card cannot withdraw more than $65 a day, and the same card cannot be used for purchases greater than $140 per day. So that comes with limits, of course, because we are teaching our children money management, and we do not want them to splurge on unnecessary expenditure if they don't have to. So it also teaches your children money management and gives you assurance that they will not go into unnecessary spending on the same cards. Back to you, Rehab.
Detailed explanation right there. Thank you very much, Jesse. Questions coming in. What is the maximum loan limit on personal loan / education loan? The maximum loan limit on personal loan or education loan.
Okay, let me start let me put it this way. The maximum amount that you are eligible to borrow under UNFCU loans is $225,000. So that is the maximum aggregate borrowing limit. Specifically to personal loans, that would be in the region of $50,000 for the personal loan, whether it be for auto, weddings, vacation, or any other need. So $50,000 for the personal loan. But remember, the aggregate borrowing limit or maximum is $225,000.
Thank you, Jesse. Still questions coming in. Final question. If you put the cash in the share certificate, do you get the cash back or it remains as shares? And can you withdraw it if there was need to? So 2 questions. If you put the cash in the share certificate, do you get the cash back or it remains as shares and you can withdraw it if there was need to?
Very good question. So the amount, let me just clarify this and say the amount in your share certificate earns compound interest. The interest is earned as an example. The amount that you earn in the share certificate will be earned every end of month up to the end of the 3rd month, whenever that in the month it is. You then have the option of having the amount sent back to your account as cash, as per the first question. So you can elect that the amount does not mature, in which case, once you receive a notification of maturity, you can elect that the money is sent back to your savings or checking account. You also have the discretion to say nothing when you're sent that email notification, in which case the amount will roll over for the same term if you don't say anything to the contrary. Remember, you also have something we call a grace period of 10 days. That 10-day grace period gives you latitude to confirm whether or not you want the cash back. But to answer the question specifically, yes, at the end of the term or the maturity, you can elect that the money is transferred back to your nominated account of choice, be it your savings or your checking account. If you elect otherwise, for example, not to say anything, then the amount is matured or renewed for the same term. Back to you, Rehab, and I hope that is a detailed answer.
That's a detailed answer. And thank you so much for the informative session and for the clarification to our members' questions. So at this juncture, I want to thank the audience for their active participation so far. So before we can proceed to our final segment, which is our panel discussion, we are going to take a short break just to allow us refresh, and we're going to be back in 5 minutes. It's a segment that you do not want to miss. See you shortly. Welcome back, everyone, to our final segment of this event, which is our panel discussion with our experts. It's going to be moderated by my colleague, George Ogwan, and I'll hand it over to him to continue with the session. George, welcome. I see our speakers joining in. Over to you, George.
Hello, everyone, and thank you for joining today's session. My name is George Ogwang, a mortgage coordinator at Nairobi Representative Office. In this session, we'll have a panel discussion as part of the Home Buying Symposium. I'll be joined by a distinguished list of guests who are experts across the home buying process. First of all, I'll start with their introductions and brief description of what they do. First of all is Deborah Njoroge. Deborah Njoroge. She's a real estate agent with Knight Frank Kenya, which is one of the biggest real estate agencies in Kenya. She has expertise in helping members like you find potential homes and guiding members through the process of closing the deal. Then we have Monica Mwangi. She's an advocate of the High Court of Kenya, and she's also a partner at Mamecha and Company Advocates. Monica has very good expertise in helping members navigate through the legal process and protecting your interests as you sign the documents and contracts that are related to the property purchase. We then have Michael Otieno, who is from Kenya Valuers. Michael Otieno is good at making assessments of property values and helping you determine whether you're getting value for your money. Last but not least, we have Miriam Wahinya. As you buy a property, it is important that you protect it and protect your life. She will be helping us in this session with all the details that we need in protecting the house in terms of insurance and protecting your life, just in case something that is unforeseen happens. I'll start with the questions. Deborah, a lot of members keep asking us, especially the ones who come into the country for the first time, those who are not familiar with the country, with the terrain, with the different sections of the city and the counties where we finance property purchases. Where is the best place to buy a property in Nairobi?
Thank you, George, and thank you, everyone, for taking the time to be with us today. So for somebody who's looking to buy property in Kenya, based off of the 4 counties that we have been recommended by the UNFCU, so the first place would be the Nairobi County. Nairobi County, as you know, is the largest capital city of Nairobi, which is the capital city. It is a growing metropolis with a lot of great infrastructure ongoing right now. So if you want to be near the city, Nairobi would be the perfect place to buy property. And also within the Nairobi region, it is segmented into 2. If you're looking for great city views, you're looking to get like a condo, an apartment, that would be the best recommendation. And if you're looking for more greenery, a better lifestyle with a lot of greenery and trees, we are looking into controlled areas like the Kitusuru, the Runda, the Gigiri, the Nyari areas where you have a low density population. So it all varies with that. When we come to the Kajiado region, Kajiado is a scenic location located at the edge of Rift Valley, and I would recommend the Champagne Ridge region because it is known for its panoramic views of the Great Rift, and it is a great weekend destination and also a great destination home. It is located only a 2 hours drive from the Nairobi city center, and it is a quiet and very natural environment. And we still have a lot of indigenous Maasais within that area. When we look at the Kiambu County as well, Kiambu County is the second most largest populous county in Kenya after Nairobi. Kiambu previously was known for a lot of farming and farmland. So that area is still very green. And what we are seeing right now in terms of home property ownership is a lot of gated communities within that area. So you get two types of gated communities, a gated community where it is being developed by one developer and they control all the amenities and the style of housing are normally the same. Or you can get a gated community where you buy land or the land is already bought or the home is already there, but you have different types of housing and then you comply with the community guidelines of the gated community. Last but not least, which is the Machakos area. So I would recommend two areas in the Machakos County. We do have the Manzoni area, which is mostly a conservancy area. It has a lot of beautiful grassland and it is also known for its scenic views. So for Manzoni, it has a lot of game and wildlife within the area. So we don't have the big five within the area, but we do have animals like zebras, giraffes, impalas, and ostriches within the area. It is also a very controlled area to preserve the wildlife within the area. So to buy property in Manzoni, the controls currently that are ongoing, you only can buy land within 5 chunks of acres for every single person. So you're not very close to your neighbor. Within the same Manzoni area, you can find areas where you're not allowed to fence your home to continue with the preservation of the wildlife, but you're only allowed to do a barrier within only 1 acre just to continue with the preservation of the conservancy. Then last but not least, within the Machakos, I would also recommend the Mua Hills. Mua Hills is also very scenic, which is characterized by a lot of rolling hills. So it's very green with a lot of rolling hills. So within this area, it's known for a lot of hiking, nature walking, and bird watching. And it is also it's conveniently located just about a 40-minute drive from the Nairobi city center. So those are the areas that I would recommend for buying a home.
Thank you, Deborah. That's very insightful and very helpful. Clearly, you know the city, you know the country. Before I get to the next question, I'd like to remind the audience that this is a unique chance. It's never easy to get all these 4 experts in one place. So please place your questions in the chat box and we'll be happy to answer them just after the last question to my panelists. Next, Monica. Monica, as I mentioned, is an advocate of the High Court. She is an expert in real estate and property law in Kenya. And I'd like to get her to answer the first question, which I think is a very important question. Which some of the most important laws that govern property purchase and ownership in Kenya?
Thank you, George. You're right, that's a very important question. So currently we have 3 laws that govern properties in Kenya. We have the Land Registration Act, the Land Act, and a recent one, the Sectional Properties Act. Before this act, we had 4 other acts that have since been repealed. However, the repealed acts remain very relevant and applicable. The reason being, number one, we are still in transition. And the second thing being that we still have quite a number of titles, especially in Nairobi, because Nairobi was the first place that titles were issued that are still governed by the old repealed laws. So a lawyer, by looking at the title, is able to tell what exact law will govern that transaction. And that informs how we'll negotiate with the vendor, the documents we'll be asking for, how to conduct our due diligence. So I would recommend that the first step is once you're interested in the property and you get a copy of the title, engage a lawyer so they look at the title and they're able to tell you this title is under this regime and this is how we are going to go about it. There are titles that are supposed to transition to the new laws through a process that's called conversion. So when you're getting this property, we'll guide you, this property needs to be updated. It's in the old regime. There are also other titles that need to be surrendered and sectional titles to be issued instead. We also advise on this. There are also titles that will still be transacted on using the repealed laws. It doesn't mean they're invalid. You'll still be able to acquire them, but there's a process to this where you engage the registry to get an approval for manual registration. We'll also guide on this. Thank you.
Thank you very much, Monica. That's very, very helpful and insightful. I will come back to you with other questions related to the law and property purchases. But before then, Michael, valuation, it's a very important process. It comes after, let's say, Caroline has reviewed your mortgage and you've been pre-approved. And before that, Deborah has shown your property and you've liked it. Now it's time for Michael to do an assessment of the property. So could you tell us what happens at the stage of valuation?
Thank you very much, George, and to the members who have joined us today. Our valuation is twofold. I'll make it very simple. And it's also sort of a rubber stamp for a mortgage. So once we get instructions from the UNFCU, we have two sorts of due diligence that we do. So the first one is regarding the paperwork. So once we get instructions, we get a copy of the title. And luckily from experience and properties in Nairobi being very well surveyed, we get a map from the Survey of Kenya and we're able to look at some of the things we need to know before we get to site. We're able to identify properties remotely when we are still in the office, which is also very important. And of course, there are areas that we know are prone to maybe flooding, being in a riparian area, being in legally, if they're not legally acquired. And we look at all those reports, which were very well documented in Kenya. And if we give it a clean bill of health, then we plan for the physical inspection, which takes maybe a day after the instruction. So we organize access to the property, and then we have to do a physical inspection of the property. So once we go to the property, we make sure we do a physical inspection of the building. For this purpose, I'll tailor it to UNFCU because it has to be a house. Then we'll look at the physical features of the property. We'll inspect it physically. We'll take internal and external measurements, and we'll note anything that we don't find in place, including if the property is properly surveyed. We are not land surveyors, but if we notice that there's a bit of discrepancy, then we'll also note that in our valuation report. So it's quite comprehensive in terms of what the union needs to know, and also the potential buyer. Thank you very much.
Thank you very much, Michael. Just to follow up on that, our members and the UNFC as a credit union, we are very conscious about time. So would you briefly just let us know, for example, if you received valuation instructions on a Monday, when should the member and the credit union expect you to finalize a report if everything went well?
Thank you, George. Once again, it's good you mentioned if everything goes well, because we have external documents that we rely on to get evaluation. So first of all, it's a title search, and just as Monica has mentioned, most of the titles now are being converted to. There's a conversion process in most of the properties in Nairobi at the moment. So searches have become a bit easier because now it's digital, and you just get a prompt to the seller, and they'd approve, and then get the search within a day. And then getting a map from the Survey of Kenya will also take the same day. So I'd give a 4 working days time period. So if we get a valuation instruction on Monday, then we supposed to close based on our SLA and also our internal processes. We're supposed to finish the report by Thursday, close of business. So in the event that we are not able to do the same, in case we are facing delays and challenges in securing a search, or even getting, sometimes we don't have access to the site, then we write to the union and also make sure the member is in copy so that at least everyone is able to plan accordingly. Thank you.
Thank you, Michael. Back to Monica, and still on the same topic of time. Without any unforeseen delays, if you received instructions from UNFCU to complete the security documentation for a member, let's say it's a purchase of a house, direct purchase, how long should the member expect the conveyancing process to take?
Thank you, George. And I am glad you said without any unforeseen delays, because sometimes things happen that are beyond our control. So what we recommend is get into a contract that gives you a period of 90 days to complete the transaction. And also make sure some of these applications are running at the same time. So your loan approval is happening, immediately after that valuation is happening, and by then you must have engaged a lawyer because of the due diligence process and the contract part. But when the security perfection process means that we have started the registration process, which means we are at that point transferring ownership to the purchaser and also creating a security in favor of UNFCU. That period takes anything between 30 days and above. If it's an online application, this is fast. The system is working on very well. Everyone is used to it by now. So those kind of applications, you're able to finish within 30 days. For the registries in Kiambu, the ones that you mentioned, you also finance, those ones are also pretty straightforward. You're able to finish within 30 days. When you're buying from a developer, that one sometimes becomes a bit lengthy because, and Carol mentioned that you pay legal fees to the developers' advocates because they're the ones who will handle the registration process. So sometimes this takes a bit longer, and it could go between 30 to 90 days. So there's no specific timeline, but for straightforward transactions, you're able to close within 30 days. And that's the registration process. It also means that the borrower needs to also be ready to sign documents when they're available, ready to pay stamp duty when it's called for it, ready to coordinate and work with the advocates on all the steps that are required from their end. So you have to really coordinate with us to make sure this process is running smoothly. But 30 days and above.
Thank you, Monica. I'll now come to Marianne. So the member is very happy they found a house. The mortgage has been approved. Now they're required to take up 2 covers. One is for the mortgage and one is for the house. Could you please let the members know why exactly they're required to take up insurance covers?
Okay, thank you, George, and welcome everyone who has joined the session. Allow me to take you through, as mentioned by George, the mortgage protection, which is the life insurance, and the property protection, which is the property insurance. So for the mortgage insurance, we start with death and disability. How this works is in the event that the loanee passes on or gets a permanent and total disability, we as Jubilee Insurance come in and say, instead of extending a burden, as mentioned by Carol, to your loved ones, we are coming in to say that we will pay the outstanding loan balance to UNFCU to cater for your outstanding loan balance so that your family does not have to go through the burden of having to repay this loan of acquiring the property on your behalf. We have also extended not only death and disability benefit, but a funeral benefit. How this works is, in the event that the loanee has passed on, we're coming in as Jubilee Insurance, saying that instead of having to also, as you're grieving, have to look for means of paying for the funeral expenses, we're coming in as Jubilee saying we're going to pay a USD of 1,000 to cater for the funeral expenses. Another thing we're saying, we have also extended a critical illness benefit. Critical illnesses includes heart attack, blindness, stroke. So we're coming in as Jubilee Insurance saying we're going to cater 30% of the outstanding loan balance to cater for the critical illness of this loanee. Because sometimes we do not foresee a critical illness happening. So we are saying we want to extend this benefit just to ensure that if this critical illness happens to the loanee, we want to secure them and their family. And then we've also extended a retrenchment benefit under the mortgage package, where we are saying we will repay up to 9 months of this loan. Okay. So we're coming in saying, retrenchment happens, unforeseen circumstances. So we're coming in saying 9 months we will do the repayment. Okay. So that is the mortgage package. So now coming to the property insurance package, where we are saying we want to not only secure the life, but we're also securing the property. So the first benefit that we extend as Jubilee Insurance is the building insurance, where we are coming in and saying, in the unforeseen circumstance, like Carol mentioned, where there was floods that happened unforeseenly in Kenya, we are coming in as an insurance institution saying we're gonna secure the building, be it a fire that has happened to the property that you acquire, be it a storm, a flood, these unforeseen circumstances, we are coming in and saying we will secure you based off the loan amount and how we calculate it per se. Not only are we extending our building insurance, but we're also extending within, like the contents within the building, where we are saying, okay, we are securing the building itself, but what are the contents inside the building, such as furniture, such as, electronics, clothing. We're also coming in as an insurance company and saying we are going to secure whatever is within the building so long as you've declared it. And then not only those two, but we're also extending all risks cover, where we're saying this is portable items such as mobiles, camera, laptops. These are foreseen things that are, they can easily get affected. So we're coming in as an insurance company saying, declare it, we will secure it. So not only that, but we're also extending a personal liability cover. How this works is we're saying in the event that an accidental injury or a damage of, something for a third party happens, we'll come as an insurance company saying we're gonna cater for that so long as it has been declared. And then we also extend this cover optional, saying domestic workers sometimes could be affected. We're talking about the help, sometimes could be affected. So as an insurance company, we're saying that in the event that this domestic worker has been affected, we will come in and cater for medical expenses so long as you have declared. And finally, we're saying in the event of any break-ins in your household, we'll come up as an insurance company and say we will cater for such break-ins and circumstances like that. So George, I will extend this by saying as Jubilee Insurance, we are here to secure you. So feel very secured knowing that when you obtain this property, we as Jubilee Insurance have secured your property. Thank you.
That was very insightful, Marianne. I'll go back to Deborah. There's a lot of construction going on in Nairobi. When you drive around Westlands, Kilimani, Kileleshwa, Lavington, you'll find a lot of new buildings coming up. I'm sure you've been to a lot of these buildings and you can compare them to what was being constructed 5 or 10 years ago. What are some of the new trends that you can see when you visit these new properties? It could be the amenities, it could be the arrangement, the sizes. What are these trends that you're seeing, especially with the new developments that are coming up all over the city?
Thank you so much, George, for that question. So yes, Nairobi, I would say, is a construction site right now. There's a lot of development ongoing. I would start by saying the key trends that we've seen is that previously we were seeing very low level buildings where you would find maximum 5 floors. And the law of Kenya is that anything that you build more than 5 floors, you need to incorporate a lift. So a lot of developers were shying off from building more than 5 floors. So we are seeing a lot of low level buildings, but right now we are seeing approvals of buildings going up to 30 floors. So we are seeing higher and higher buildings. Secondly, we are seeing a lot of need for changes in amenities. Previously, the standard amenities used to be a gym and a swimming pool. Right now, we are seeing infinity rooftop swimming pools, which are heated, which is now becoming the new trend. We are seeing a trend in having a small restaurant or coffee place in apartment buildings. We are seeing also an increasing trend of having sky gardens, social halls within different places. And moving away from the apartments, in terms of homes, we are seeing a lot of need for gated communities. There is a huge demand and growing increase in gated communities, and also master plan cities like Tatu City, Northlands, and Tilisi, which are also upcoming within the Nairobi and Kiambu region. So those are the trends that we are seeing currently.
Thank you very much, Deborah. I'm sure you had more to tell us. I see you normally give us reports quarterly. Maybe one of these days we'll ask our members to go deeper, because there's a lot you can learn about Nairobi. Other than just the 20 minutes that she's given us a brief, but very good brief anyway. I'll come to Michael once again. What are the data sources that you refer to when you are arriving at a value for a house? For example, I'm buying a house at for 20 million in Westlands. How do you arrive at an open market value for that property and other values such as insurance values and for sale values?
Thank you, Judge. Thank you very much for the question. We have very many methods of undertaking evaluation for a property. I'll just go through them quickly. One is cost approach, the second is comparables approach, and the third one is income approach. But for purposes of buying a home, we usually use comparables, sales comparables approach. And sometimes we use a blend of comparables and cost approach. For example, if you're buying a standalone house in Runda and we don't have sufficient data for comparables, then we'll use comparables in terms of likes for likes. Then we'll use comparables approach for land and cost approach for building. So we look at the building. If it's a new building, if it's an old building, then we know how to depreciate it. That's something that we gain by training. Then we apply appropriately. So if you're buying an apartment, then in various areas, because we're also agents and we have some of this data from the comparable sales, then we apply a per square foot purchase price, call it value per square foot, and we apply that and support it with our data, and also look at all the approaches. Sorry, I think you have to repeat the second question.
I think you've covered. We were just trying to find out
Okay.
or have an understanding of how the values are arrived at. But I think you've covered it well.
Okay, sorry, thought there's a back end to it that I didn't answer. Thank you very much.
Okay, that's fine. So I will come back to Monica once again. we have a lot of members who are interested in buying properties, but they're outside the country. Some of them are inside this session. The question is, do they have to be in Kenya to complete a property purchase?
No, they don't. They don't have to be in Kenya. I think in 2025, you don't have to be in the place where you're buying the property to buy the property. And we have technology now. We have proper courier services that can help you do this. So what we do is we write a very detailed email telling you how to sign the documents. So currently there are documents that you can sign digitally and they will be binding documents. However, we are still in transition and there are documents that you must sign physically and a wet signature is required. These are specifically documents that will be submitted to the registry for registration, the transfer, and the security documents that we create in favor of UNFCU. But not to worry, what we do is we send these documents to you on email with steps on how to print on your end. And because you're not signing these documents in the country, you might need to sign them in the presence of a notary public, which I think is a service that's accessible to most people. Once these documents have been notarized, I believe right now most courier services are very reliable and they're able to send the documents back to us in 2 to 3 days. So you just courier the documents and we'll provide our physical address. This has worked in the past. It's still working and I believe it will work even for the members who are coming in.
Thank you. Deborah, we were speaking about a lot of properties that are still under construction. I know some of our members have visited these properties and they ask themselves, is it safe to buy properties that are still off plan?
Thank you so much, George. So I will start by saying, yes, it is safe to buy off plan, very much so. The only thing that you need to do is do the due diligence for the developer. So I would start by saying that a leader is only as good as their team. So when you're coming to off-plan developers who are doing it, you first look at the team who is surrounding the developer. Before going to the history, we come and look at who is the architect, because they will need to give out their certificate from the architect once the building is complete. We go and reference back to the architect. Who is this architect? Are they a registered architect? What other buildings have they done? Then you go back to the structural team, which is a structural engineer, the same thing. Confirm if this structural engineer is a registered engineer, and there is an online platform where you can be able to check that. Thirdly, I would say someone who's very important in this process would be the lawyer. Who is the representative lawyer of the developer? Do they know this project? What documentations do they have about this project? You can get a deeper dive into the documentation of the developer from the lawyer. Another thing which I feel also people overlook is that, does the developer have a current office within the current county or country which they're stationed in? Are they operating purely online, or is there somewhere you can physically go and find this developer? Yeah. So these are some of the things that we look at when you're doing due diligence for the developers.
Thank you very much, Deborah. Now I'll come back again to Michael. Now you have presented a report, and a lot of our members, just like myself, are very thorough when we are reviewing documents. Now, if I may ask, what are the top 5 things I should look out for in a valuation report that you've done? There's a lot of information in a valuation report, but just briefly, you could just mention them, one or two words, but what are the 5 things I should look out for when a report is presented to me?
Thank you, George. I think the first thing to look at, and the most critical maybe, is the title search, because you'll be able to see if the title has been charged before, if there's a caution on it, if there are any any disputes in terms of the title. Number two, you'll have to look at some of the reports we look at in terms of the Ndongo Land Report. This is a report that lists all the properties in Nairobi that and countrywide that were not legally acquired. Maybe they belonged to a corporation that, for example, I'll give an example, like Kenya Railways, which we know most of the properties were not legally acquired. Number three, in a valuation report, you look at the methodology that has been used. If you're given sufficient information in terms of comparables. Number four, I'd look at also the rates and the rent that we have to attach to the valuation reports and see if they have been paid. Right now, for maybe sectional properties like apartments, that will be controlled by the holding company, that is the managing company. Number five, what will I look at? If there are any issues in terms of the survey map, if there are any encroachments in terms of boundaries and all that. We are not trained to do that as values, but we'll give recommendation because, first of all, as I said, before you go to site, you look at the properties on Google Earth, and we are trained to measure and when we go to site, then we have to relate to what we are looking at online vis-a-vis what we have seen on the ground. So if we see any discrepancies, then we have to note that. It's a very rare occurrence, but it has happened before. So it's always good to be very careful because property can be presented as half an acre, but on ground there a few encroachments that have happened. So land surveyor has to come in and give an independent report based on our recommendations. Thank you.
Thank you very much. Marianne, it is said that you never know you needed insurance until you need it. Now, in the unfortunate event, God forbid, I bought a house, let's say in Rwanda, and it's burnt down or it's been affected by flooding. Could you take us through the process of filing a claim and what timelines are we looking at before we get the funds to start the repairs or the funds to purchase another property of the same value? Briefly, in about 1 minute, we only have time for just one question. Yes.
Not a problem, George. So in the event that unforeseen circumstances, like as George mentioned, your house gets flooded or even your life gets, you pass on, please let UNFCU know. Because UNFCU is the only way for Jubilee to know that an unforeseen circumstance has happened. So the first step is your beneficiary or yourself should let UNFCU know. Then UNFCU will now extend that information to Jubilee. I will mention that we do have a wide team of claims people, whereby we are saying we will guide you through the process. So once Jubilee is aware, we will guide you through the documentation required. So once you share the documentation, because we will send you an FCU who already have your documentation, they will provide it to us. Then we must analyze the claim. Just an analysis just to see like indeed this has happened. I mean, then again, we're a stable company and this process must happen. So after analyzing, we will then extend and pay the claim. So ideally, I can even mention we have not paid any claim. So all claims have been payable from UNFCU. So analysis should not scare you saying that we will not pay the claim. We will pay the claim. So just notify UNFCU, who will notify us, we will analyze the claim, and then we'll settle the claim. Thank you.
Thank you so much. This has been really, really interesting. I wish we had time for more questions from the panelists, but not to worry, the audience have a lot of questions from on their side. Let me just go through them and we can start answering them. I can see the first one is, can UN staff rent in Karen? Let me take this. So for Kenya mortgage, for the purchase, you can buy in Karen. Karen is within the eligible areas. Now, when it comes to renting, you may need to consult UNDSS if you're in Nairobi, or the Department of Security Services for United Nations office in Nairobi in terms of renting, because as far as I know, they do some checks on the properties that you are renting. Another question.
George, can I come in on that?
Yes, please. Yes, please.
Yes. I would like to confirm, yes, the UN staff can rent in Karen. We have a number of people who are living in the UN. So the only thing is to confirm if the property is UN security certified. And then once that is done, you have a go ahead to rent the property.
Thank you, Deborah. The other question, do you have an ROI mapping across Nairobi? So for example, I'd like to know if I buy a home or apartment in Runda or Kileleshwa, am I clear on potential ROI? I think this should be for Michael.
Yes, George, thank you. Yes, there are many reports published, including Deborah's company, Knight Frank, and some of this information is there. So from what I know in terms of returns in real estate in Kenya, and this blue zone area where our members today are particularly interested in, yes, there is a good ROI in property investment, but is from property to property sort of scenario. So most of the properties around Gigiri and Runda are paid in USD, which as I explained earlier when we started this discussion, is a very stable currency that is also used by the UN for their mortgages and all that. So there's a reliable ROI and stable ROI that you can work out when you're getting a property. Thank you.
Thank you, Michael. There's another question. Can you provide a breakdown of what closing costs look like when buying an apartment or a home? Earlier in this session, Caroline went through them, but I'll just mention them briefly. You should budget for about 8% of the purchase price when you're buying a house in Nairobi and the 3 counties that border. Highest cost is stamp duty, 4%. UNFC will charge you a processing fee of 1%. And this coincidentally, all the people who will charge you any fees are in this session. So Monica will charge you about 1.5% in legal fees for the registration of that property as UNFU security. Michael Otieno's fees are guided by the Values Act of Kenya, so it is scaled, but simply valuation fees is 1% on the first 5 million Kenya shillings and 0.25% on the residual balance. Then Marianne will ask you to pay for 2 covers for the house, approximately 0.2% of the value of the house per year, and 0.4% of the loan balance that you borrow per year. So that's a short breakdown of the costs. Another question, does the UNFCU give mortgages on buying land? Unfortunately, we are not yet there. We are yet to start financing land purchase at the moment, but you can still use the international property loan, which can allow for the purchase of land in Kenya or anywhere else in the world apart from the US. Then another question is, foreigners buying property in Kenya, I learned there is ownership timeline of 99 years. Is that renewable? And what is the process and cost? That would be for Monica.
Thank you for that question. So yes, you're correct. Foreigners are not allowed to acquire freehold property, so which means they can only acquire leasehold property, which is mostly 99 years. Is this renewable? Yes, it's renewable. There are steps involved in renewing. where the county, the relevant county is involved, either the Nairobi County or Kiambu County, and you make an application for this renewal. So I can't really comment on the cost right now because these are not things that we really know. The first quotes you'll pay to the county as you make the application, and they also change depending with the location of the property. But it's not very, it depends with where you are. For some areas, it's very costly, and for some, it's reasonable. I hope I've answered that question. Thank you.
That is very well put. And it looks like a lot of our members have questions for you, Monica. So I think one of the most challenging parts to navigate is the legal part. So this question is from a member who is asking, how do you handle a situation where the original owner of the property I want to purchase has lost the title deed?
Yes, this can be resolved and you can buy this property. However, before you buy the property, the owner must have, we call it a reconstruction process. So it means they have to go back to the government, because the government issued the title, and apply for reconstruction. This process takes between 3 months to 4 months. The reason being there's a mandatory period that we call the gazettement period, where this property must be gazetted for 2 months. So there are steps involved. You must report the title as missing to the police and get a police abstract. You must get a search from the government showing that the title is still in your name, sign some affidavits, and indemnify the government that they'll not suffer any loss by reconstructing this title. You must get a letter from the chief confirming that you lost the title, and then now apply for the gazettement. So I think to answer the question in a simple way, yes, there are steps to reconstruct, and after that, now you just do due diligence and proceed to buy. Thank you.
Thank you very much. There's an interesting question over here, and I know out of 1, 2, 3, 4 panelists, 4 would want to say they would be the first. So a member is asking, out of the 4 panelists, who should I see first? So this is very interesting. I know the last person you should be seeing is Marianne. That I'm very sure, because at this point you've decided, you've acquired the property, and it's time to insure it. I'd say this. It's important for you to budget before you go out to purchase. So if you have cash, and you do not need any financing from UNFCU, then Deborah, as the real estate agent, would be the first person to see. Then it will be followed by Michael. Michael would do some due diligence for you, assess the value and tell you if you're getting value for your money. Then Monica will now start doing the legal paperwork. But you'll find that members meet different professionals at different times. So you find that members have already met Deborah. Perhaps your colleague bought a property somewhere. You know that you qualify because they qualify. So by the time you come, you've already seen Deborah. But just to be clear, it would be best to start with the mortgage department, Kenya Mortgage, because it is the amount that you're eligible for, plus the amount that you have as savings combined, that you can afford to buy a house. So with that, you can go to Deborah, with confidence, and tell them that I'm looking for a property, let's say for $200,000, $300,000. Does anyone else have a point to add on that?
Yes. I would like to mention the second part of the question they asked, is there a fee associated? For us as Knight Frank, there is no fee associated in searching, finding, or taking you to sites to view the property.
Thank you, Deborah. Now, I think this is for you again, Deborah. How would you describe the real estate market in Kenya? Is it a buyer's or a seller's market?
So I would describe the current market as a buyer's market. If you have money to buy, you have a lot of options. For example, if you're working with $100,000 US dollars, you can either buy in Nairobi County, Kiambu County, Kajiado County, Machakos County. You can even buy at the coastal area as well. So I would say it is a buyer's market.
We still have some time, so if you have any other questions, you can still submit them. Now, there's another question. What should a proper property inspection include? And I think this should be for Michael. I believe the member is asking when they visit the house. Now, Deborah is almost likely trying to sell. But now they've identified a house and they've narrowed down to 2 or 3 houses. What are the things they should look out for in the individual houses before they make a decision?
Thank you, George. That's a proper tongue twister. It's a proper property inspection. Yes. So I'd say what we look at is cracks and flooding when it's raining. I usually tell my clients that the best time to buy in Nairobi is when it's raining, the rainy season. So if there are any leakages on the roof and if there are any cracks, we note that. Unfortunately, again, we are not trained structural engineers, but we can give recommendations. So we advise the union if we notice that there's any dampness in terms of the walls and the floors. And I'd really recommend most of the properties in the Blue Zone area are really well looked after. So we rarely have some of these problems. Yeah. So a proper inspection includes we just look at cracks and if there are any leakages, and also from outside if there's any land movement in terms of any property that is within the riparian area, and how many meters also they are from the riparian area. So we are more of physical inspectors, and then when it comes to structural, we are not very technical. So in terms of, we can give recommendations and then we can bring in the right people. So for the land, we can bring in a land surveyor, and then for the building, we can recommend a structural surveyor and a quantity surveyor. Thank you.
Thank you, Michael. There's another question. I believe this should be for Monica. It reminds me of one of the questions I'd wanted to ask her. She can combine these 2 questions. So, how will government policies affect home ownership in the next few years? So, if you know any policies that may affect housing in the next few years, and in addition, could you maybe just let the members know what ADISASA is, because they're likely to come across this if they start the process of purchasing a house?
Thank you, George. Let me start with the second question. What is ADISASA? So to simplify that term, I know sounds complicated, but it's just a Swahili. It's coined from 2 Swahili words. Ati means land, Sasa means now. So it just means land now. But I think it was cooler to call the platform ADISASA than Land Now. So this is an online platform that came in around 2021 in an attempt to automate land transactions in Kenya. So once again, we are still in transition. We are trying to move from the manual process to in Nairobi, but even in Nairobi, we are still in transition also. So ADISASA was set up to allow land transactions to happen online in this system. And I spoke about conversion earlier. This is how old titles are being converted through going through this system, getting new numbers, and you can now transact on them. So it's very important for your members to know about this system because it affects everyone. Currently, another function that has been moved to this system is payment of stamp duty. Every time you're trying to generate an invoice for payment of stamp duty, and we've talked about stamp duty, it's payable by everyone, you need to use this system. And for you to use this system, you need something that's called an ADISASA ID. How do you get an ADISASA ID? You get an ADISASA ID by registering in the system. For Kenyans, it's pretty straightforward. If you Google right now, individual registration on ADISASA, it's a step-by-step process. Put in your your Kenya national ID, everything else just flows. For non-Kenyans, it's still possible, but you have to use a back-end process. They are really trying to, I think, update passports so you're able to use a valid passport, but we are not there yet. If you Google ADISASA, there's a chat box that pops at the end. You just need to send a message. They're very responsive. Tell them you're a foreigner. I want to register. They'll give you the requirements and what to submit. You can use your lawyer to help you with this, but it takes a few days and you're in the system. So in the next few years, I believe every person who's buying property in Kenya, all transactions will be done on ADISASA. Like I said, Nairobi is on. They're moving to Kiambu. They'll move to Kajiado soon. So it's a system that everyone will interact with at some point. It's a very, very user-friendly system. That's how it was set up. Very easy for everyone to interact with. It's made our land systems very, very efficient and accessible. So I think everyone in this panel can agree it was a good move and it's really helped us. So the second question was, how will government housing policies affect home ownership in the next few years? I believe they're talking about the affordable housing thing that's happening by the government. So I don't know how this would really affect your members because it's an affordable housing scheme that's meant to settle people of a certain income, to settle them down. So they're very small houses, and I don't know whether anyone else can comment on this, that are just coming up to settle people of lower income. So I don't see this really affecting your members. And I don't think the government is willing to move this scheme to high-end areas or to finance bigger houses. So they're just doing very small houses for small income people. Thank you. I hope I answered that.
Thank you very much. I
George,
think that's
can I
well put. Unfortunately,
Shami?
Deborah, we've run out of time. It's really sad to say that because I've really enjoyed this session. I've learned a lot myself. I believe the members also have learned a lot. To those whose questions we are not able to answer, we apologize, but we're always open to your questions. You can visit us in our offices, you can book an appointment with us, you can send us an email, or you can give us a call. I believe at the end of this session, Rab will provide us with those details. I'd like to thank my panelists for the time that they spared out of their very busy schedules to speak to our members and to provide the guidance that they have. Thank you very much, and enjoy the rest of your day. And I wish to see you soon. I hope that your home ownership journey is smooth and that we are part of it. Thank you very much.
Thank you to all our panelists for all that insightful discussion. We truly appreciate the expertise and the knowledge shared. Before we wrap it up, a huge thank you to our speakers today, Caroline, Jesse, George, Deborah, Michael, Monica, and Marian. And to our audience here in Kenya, we say, Asante sana. Thank you for making this session as interactive as possible. If you'd like to rewatch this session, a recording will be available in the coming days on our website. You can even tell a member who you know will benefit from this session, and we'll also share it through your email. You're also invited to visit our home buying page at unscu.org/Kenya Mortgages to learn more about your options. Our mortgage representatives are always here to help you and address any questions that you may have. You can find our contact on the Kenya Mortgage page or by scanning the QR code on this slide, and we'll be happy to connect and we'll be happy to take you through your home buying process. With that, thank you once again for attending. Have the rest of your day blessed.